Welcome to The Explainer. Today, we're going to crack open the playbook of a true Wall Street legend, a guy who believed the secret to amazing investing wasn't locked away in some skyscraper, but was actually waiting for you, right in your own backyard. 29.2%. I mean, just let that sink in for a second. For 13 years straight, one investor delivered that incredible number. To give you an idea of what that means, if you'd put in $10,000, it would have turned into more than $280,000. But here's the thing. He didn't just beat the market. He showed that you, the average person, could do it too. And this was his big revolutionary idea. He was basically saying that your daily life, your job, the stuff you're into, gives you a massive edge that the pros, stuck up in their offices, just don't have. So, okay, who was this guy? Let's meet him. This was Peter Lynch, and he wasn't some, mysterious Wall Street wizard. He was the manager of the Fidelity Magellan Fund, famous for being super practical and down to earth. And, well, his results really do speak for themselves. So where does his whole philosophy start? With this really simple but powerful idea he called the circle of competence. And it's got nothing to do with complex formulas or secret inside tips. Nope, it's all about using the smarts you already have. You've probably heard his most famous advice, right? Invest in what you know. But, a lot of people get this wrong. It doesn't just mean, oh, I like this brand of soda, I'll buy the stock. It means using what you're an expert in as a launchpad for doing some real digging. I mean, think about it. It just makes sense, right? A teacher in a classroom sees which new technology is actually getting bought by schools. A doctor knows which new drugs patients are asking for. A retail worker sees with their own eyes what's flying off the shelves. That's your edge. You're seeing these trends from the ground floor way before an analyst in a skyscraper ever catches on. Okay, so let's say your circle of competence has lit up a giant blinking sign over a company. Now what? Well, this is where we get into the really practical stuff. It's time to open up the Lynch playbook. And the very first thing he says to do is absolutely crucial. You have got to figure out what kind of company you're even looking at, because the risks, the rewards, the whole game plan are totally different for each one. And here they are, his 6 categories. This table is basically your strategic map. Now, Lynch found his biggest home runs, what he called 10-baggers, in that fast growers category. But he also knew you needed the big, stable stalwarts for defense, and that the turnarounds, while super risky, could have explosive potential. The point is, you have to know what game you're playing before you can win. All right, so you've put the company in its bucket. Next up, you got to check the numbers. And Lynch had this one favorite go-to tool that let him cut right through all the noise to see if a great company was actually a great deal. So what does this PEG ratio actually tell you? Think of it like a quick reality check. If the number is below 1, that's a great sign. It's like a seesaw tipping in your favor, suggesting the company's growth is outpacing its price, a potential bargain. But if that number is way above 1, red flag. It's a warning that you might be paying way too much for that growth. But here's the thing about Lynch, and this is so important. The numbers were only half the story. The other half was about having a clear, simple idea he called the 2-minute story. And for him, this was a deal breaker, a non-negotiable. He famously said that if you can't explain to a teenager in 2 minutes why you own a stock, then you probably shouldn't own it at all. That story, that's your whole investment thesis. So why is this story so important? Because it's your anchor in a storm. The market is going to get volatile, it's going to get crazy, and when everyone else is panicking and selling, you don't have to. You just go back to your simple story and ask yourself, has the fundamental reason I bought this changed? If the story is still solid, that scary dip in price might actually be a golden opportunity. So you see how it all clicks together? You start with your personal edge, you categorize the company, you check the numbers, and you build a simple story. When you do all that, you unlock what Lynch believed is your true power as an investor. And it all boils down to these 4 golden rules. They're not complicated formulas. They're about behavior. 1, do your homework. There's just no substitute. 2, find a story you actually get. 3, go for companies with low debt because that's what saves you in a downturn. And 4, maybe the hardest one, be patient. Let your winners run. The biggest takeaway from Peter Lynch is really this incredible sense of empowerment. He leveled the playing field.
He proved that you don't need a fancy degree to win in the market. What you need is curiosity, common sense, and the discipline to actually do the work.
So, the challenge she leaves for all of us is this. Start looking around. Start observing the world with an investor's eye. The next great opportunity might not be in some analyst's report. It might be the coffee shop you love, the software your company just adopted, or the store that's always packed. Your journey doesn't begin on Wall Street. It begins right where you are.